how is the Biden tax plan going to affect potentially capital gains tax and the sale of your highly appreciated asset? That is the subject of this video. I'm Brett Swarts, founder of Capital Gains Tax Solutions. I'm here on the New York Stock Exchange, where people make a lot of money buying and selling stocks. People also make a lot of money buying and selling investment real estate, cryptocurrency, as well as primary homes and businesses. But the biggest challenge when they go to sell it is paying capital gains tax. And that capital gains tax, it can be enormous. And part of the Biden tax proposal is he's proposing to change it from 20% federal to about 40% federal. Now, the latest news on that is somewhere around potentially 20% to about 25 or 28 or 26. It hasn't been finalized, but that is a big change in your pocketbook should he and should the administration change the capital gains tax rate. You want to be aware of that. Now, there's also state and there's also Obamacare, 3.8% you want to be aware of as well. So if you live in California, for example, it's 20% federal right now, 13.3% state, and then 3.8% Obamacare takes you to about 37%. Should Biden pass his proposal, it's going to be potentially upwards of 20, upwards of 5, or upwards of another 6% on that total capital gains tax rate. So you want to be aware of what your rate is and how it affects you when you go to sell your asset. The second thing to be aware of is potentially the change on what's called carried interest. And so if you own investment real estate, if you are a general partner, if you're buying and selling investment real estate in a way where, especially through syndications, where you're earning your equity through what's called active management and ownership, you have what's called carried interest. Now, on carried interest in the past, you would be able to defer capital gains tax using what's called a 1031 exchange. Well, part of the Biden tax proposal is to not only tax the carried interest at ordinary income tax, but also potentially to remove the 1031 exchange for exclusions amounts above $500,000. And so you want to be aware of those two major changes, and you want to be aware of what segment that you're selling and what you're selling, what it's subject to. Now, a good solution for that, for both of those challenges, is the Deferred Sales Trust, where you can defer capital gains taxes by using what's called an installment sale method. We call it a specialized installment sale, where you, instead of being the owner of your asset and exchanging it or moving it into another asset like a 1031 exchange, you can carry back paper, meaning you become the lender. And you receive payments over time, and you slowly pay tax. It's kind of like an IRA, kind of like a 401k. And so those are a couple things to consider when it comes to the Biden tax plan and how it might affect your capital gains tax on the sale of your highly appreciated asset and or any of your clients that are looking to sell a highly appreciated asset. Hey, my name is Brett Swarts, and if you need or want more questions, start that over. My name is Brett Swarts, and I appreciate you watching this video. Should you have any needs for capital gains tax deferral and sale of highly appreciated assets, please feel free to go to capitalgainstaxsolutions.com, and one of my team members, cut that again. Hey, I'm Brett Swarts, Capital Gains Tax Solutions. I appreciate you watching this video. Should you have any need for capital gains tax deferral? Hi, I'm Brett Swarts, founder of Capital Gains Tax Solutions.